Greg Gossett from Gossett Trading and Mentoring Live, and today is Wednesday, June 12th, 2019, and we are now in the final hour of the trading day. As most of you know, I believe that the prices during the last hour, and specifically the prices as close to the close as possible, are the most valid prices of the day, and therefore those are the prices that I make my entry and exit decisions on. So we have 1 hour to go. The format for today is we are going to first of all take a look at my current positions, take a look at when I bought them, why I bought them, and how I'm going to manage them moving forward. Then we're going to take a look at my watch list. I'm going to go through each stock in my watch list. We're going to take a look at the technicals. We're going to look at support areas, resistance areas, look for entry triggers, and if there's a good entry for us, potential setup for us, I will be taking that near the very close of the market. And then after that, what we're going to do is we're going to after the market closes, then I'm going to answer any questions that you may have. So if you have any questions and you're not sure about something I've said, or you want me to take a look at a particular stock and give you my opinion on the technicals, I will be happy to do that. So, all right, let's go ahead and run the U.S. legal disclaimer. And then after that, we will get to the market. So hang tight and I will be right back.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okay. All right. So anyway, we have had quite a run in the market over the last 7 days. So today the market is down a bit. The Dow is down 42, the Nasdaq's down 30.41, and the S&P's down 5.76. So not a big day down, but this is the first red day we've had in about 7 days. Not too bad, but you know, it's to be expected. So it'd be nice if every day just went on and on and on making money, but of course that's not realistic. So let's go ahead and take a look at my current positions now, when I bought them, why I bought them, and how I'm going to move, or how I'm going to manage them moving forward. So, all right. So I did buy Apple on the 7th of June when we had this nice strong break above the 200-day. And, you know, if it had gone against me, I would have immediately gotten out in subsequent days if it had closed below the 200-day moving average. So I like to buy as close as I can to my the moving average that's triggering my entry, so that if I'm wrong small, and if I'm right, you know, I give it a chance to mature, give it a chance to have a larger gain. So as you can see, we bought here at 190.05. It has moved up the last 3 days. I think I hit 3 profit targets the day after I bought it. I hit 1 profit target yesterday. So it's nice to take some chips off the table and lock in those gains up there. Today, we are down 52 cents. If we close today below the close of yesterday's low, that will be my signal to go ahead and just lock in the entire profit on the position. Right now, it did test it intraday, but I need this, you know, if I'm going to have to get out of this, I'm going to have to wait for today's close to go below yesterday's low. So it did test it intraday, but currently it is above. As long as it stays above, I will continue to hold Apple, but it's been a really nice trade so far. All right, CGC. This was a weekly trade for me, and the reason that I bought it is, let's take a look here. Oh no, sorry, that was not the weekly trade. This is the weekly, or this is the daily trade. So Canopy Growth, we in the past couple weeks we went way down below the 200-day moving average. I don't want to mess with it down in this area. Back on the 10th of June, it had a nice strong break above the 200-day moving average, which would have been a legitimate signal. I decided to see if it would backfill a little bit, and it did. So I didn't buy it here. I bought it yesterday at 42.93. When it came back, it tested the 200-day intraday and then closed back above it. So, you know, like I said before, I like to take my trades as close to my line in the sand or my initial stop as possible, because that gives me the smallest amount of risk and the largest amount of gain. So it's really right on the bubble right now. My initial stop was 42.74. That is the moving average, 42.74, and it is right there. So if it closes under 42.74 today, which is this red line here, I will just go ahead, get out, take a very small loss, because, you know, that's the important part of trading, is just, you know, taking a stab at it at a place that has some support, a place that has meaning. If you're wrong, immediately getting out, not holding on and going, well, I think it's going to come back and da-da-da. You know, just get that out of your head. You just gotta, you gotta take your losses when they trigger. If that's your plan, and that was my plan, I'm going to buy above the 200. If it closes under 200, I just got to get out. And it may go roaring back up tomorrow, but that's just how it goes. It's just part of trading. So right now it's at 42.70. If it closes under 42.74, I will just go ahead and take a very small loss. So we'll see where this closes today. Hey, Mount Doji, how you doing? Good to see you, my friend. Hey, Dr. Jorgensen, come on, guys, use your weed so Canopy goes up. Buy some new weed. Help Greg out. That's right. Are we team players here or not? So anyway, we'll be watching CGC at 42.74 is the level that we need to look at. I do want to say Apple and CGC were both discretionary trades. So depending on what the price action does, you know, I may stay in, I may get out. Now, contrast that to DDM. DDM is a trend trade. I bought it with a close above the 200-day back on the 6th of June. My initial stop is a close under. I will continue to hold this trade until one of two things happens. One, it either closes back under the 200-day, or I continue to phase out until I run out of shares. That is the plan. And, you know, if you look at a back-tested results on DDM off of the 200-day, let's take a look real quick. This is etfreplay.com. I'm using this by permission. So here's the back test, and the parameters are: you buy when it closes above the 200-day, you keep it until it closes back below the 200-day. So it's that simple. You can see using this approach on the DDM, it returned 308.2% with a drawdown of 28.8%. Just buy and holding during the same period would have returned 275, so less than the approach, right? But it would have had an 81.7% drawdown. So you can see if you're going to trade DDM based upon these back-tested results, you're much better off keeping it when it's above the 200 and getting out of it when it's under the 200. And the drawdown is much less as well. So it beats buy and hold on both counts. So that is why I bought DDM here. Like I said, if it closes below the 200, I'll just go ahead, lock in the loss. May not even be a loss because I've been scaling out as it's been moving up. I like to scale. I like to take something when the market gives me something. Not everything, just a portion. So a close below the 200, I'll be getting out. or I'll continue to stay in the trade as long as it's above the 200, and I will phase out until I am out of shares. So that's the plan on DDM, but it's been a nice profitable trade so far. All right, 5 below. Here's my weekly trade. So I really like this pattern. Do you see how we make a higher high than this previous high? So we're in an uptrend, obviously. Now we've come back down, which is normal. We've come back down into value, which is the positive ATR channel and the negative ATR channel. So it's moved up, higher high, come down, and the key here is it's moved sideways. It ran out of sellers, and then last week it attempted to go down. It stabbed down, and then this week reversed back up into a V2. And a V2 is a combination of 3 bars. You have bar 1, or week 1 in this case. Week 2, or bar 2, goes under week 1, washes it out, goes down below, and then it comes all the way back up. It didn't close above day 1. If it had, it would have been considered a V1. But this week it did trigger and go above the close of day 1's close. So you can see we are a little bit in the money. We bought it here at 129.55, and now it's 130.25. So if this closes, if this week closes below week 1's close, I will go ahead and just take a small loss on this trade. If it confirms this week and continues, then a close below the halfway of the washout bar will be my secondary stop. So this is a nice formation. It's called a squeeze play. And a squeeze play is when you make a higher high, and I should give credit to Kerry Lavorne. This is his approach. Made a higher high, came down, moved sideways. The sideways portion is the squeeze portion. Last week attempted to go down, could not. We ran out of sellers because we immediately reversed, and then this week we've triggered the V1. So we are positive on the trade, and a close below this red line this particular week, I will be getting out of the trade. Oh, that was 5. All right. Hey, Andy. Good to see you, my friend. Thanks for coming by as always. All right, let's look at Intel. So, Intel. I did buy Intel back here on the 29th of May. And why did I buy it? Well, the previous day, we went below the 3rd ATR channel. This is this thick line here. And we also were below the 30 RSI, which is a bad signal. But the very next day, not only did we close back above the 30 RSI, we also closed back above the 3rd ATR channel. So that was my signal. Moved sideways for a couple days, but then we had this nice run up. I've been phasing out of the position all the way up here. Did hit one profit target again. Well, you can see, I mean, we hit profit targets almost every day. Hit the final one last night. Today, however, it looks like we're closing below the previous day's low. So if today does close below yesterday's low, I will go ahead and just lock in the entire profit. But from top to bottom, this was a 7% trade, and locking in here, still a 5% trade. So the key is, you know, if I was wrong, I was going to be wrong maybe this amount of room. If I'm right, I got to have multiples of that, right? So I probably had 3 times the upside than what my risk was. And that's what profitable trading is about. It's about having larger winners and smaller losses. And they have to be asymmetrical, meaning if you're going to risk $100, you can't really try to just make $100. You have to risk $100 to make $200 or $300 or $400. So that's the key to profitable trading, is having asymmetrical trades. And the only way you're going to do that is by limiting your losses and having the ability to let your winners run. Excuse me. So anyway, we will be locking in the rest of our profit on Intel. It was a really nice trade. Thank you, Intel. Okay, so Philip Morris. Why did I buy Philip Morris? It was the same. It was the same as Intel. I bought this here on the 7th of June. The day before, it was under the 30 RSI and also under the third ATR channel. The next day, it went above the 30. It closed above the 30, and it also closed above the third ATR channel. The next day, it went right down. Next day, it went right back up. Today, it is down again. I don't like the action here. You know, we do have a loss on this of currently we bought it right here, about 1.5%. I don't like the action. And you know, when you have these trades where they go under 30, over 30, under the third ATR, over 30 ATR, they should, you know, give it a couple days, but they should start moving. I don't like the action that this is now not moving anymore. So, you know, there's two ways you could approach it. If it closed under the 30, keep it until it closes under the 30, or what I'm going to do today, I'm just going to go ahead, exit this trade. I just don't like how the trade is performing. The best trades you have usually take off in your direction right away. So, unless this has some miraculous recovery today, I'm going to go ahead and just lock in this small loss on Philip Morris. All right, the Qs. Philip Morris was a discretionary trade, so it allows me. It's just, you know, it allows me leeway in what I want to do with it. So this is a discretionary trade. The Qs. I did buy the Qs back here on the 4th of June. This is not a discretionary trade. This is a back-tested trend trade like the ones I just showed you on ETFreplay.com. But, you know, buying above the 250-day moving average, staying in it unless it closes back below the 250-day moving average is a great quantified, profitable to back-testing approach, a way to trade the Qs. So same with DDM. You can see we bought above. It's moved up nicely. I've been scaling out, scaling out, scaling out. If this were a discretionary trade, I would be getting out today because this day is closing under the previous day's low, but it's not a discretionary trade. This is a trend trade. So only two things can happen with this particular trade going forward. It's either going to close below the 250-day moving average for my exit, or it's going to continue to move up. I'm going to continue to phase out until I run out of trades. So hope that makes sense, but this has been a great, wonderful trade. Thank you, QQQs, but we're not done with it. We'll just have to see what it does moving forward. But again, close below the 250 is my exit to the downside. If it continues to move up, I will just continue to scale out until I run out of shares. You can see my three lines here. These were my profit targets today, but it does not look like we are going to hit any of those today, but that's fine. All right, so the SPY. So as many of you know, let me just grab something here. All right. Where'd I go? All right. So as many of you know, I buy the SPY each day at the close of the market, and I sell it the first thing at the open. And why do I do that? So two charts here. One is an older chart, one's a more recent chart. But since 1993, if you would have bought the SPY, the SPY on the open in the afternoon and sold it each day, or sold it the next day in the morning on the open, so basically holding it during the day, buy in the morning, sell in the afternoon, since 1993, you would have lost 5.2%. But if you did the opposite and you bought on the close and then sold first thing in the morning, you would have returned 568%. So buying in the morning, selling in the afternoon, you would have lost 5.2%. Buying in the afternoon, selling in the morning, you would have lost 568%, meaning that more than all performance came in after hours trading. People bidding it up in the after hours or the pre-market. That is where all the gains have come from. I know it's hard to believe, but you can see the graphs here, right? The green line is the buying in the afternoon, selling in the morning. The red line is the buying in the morning, selling in the afternoon. So you can see it's had a great performance. There are drawdowns associated with it, sometimes for an extended period of time. Be careful. Position size correctly, have a small position size that you can withstand these kind of moves. But I will be buying the SPY every day in the afternoon, selling it every day in the morning for the foreseeable future because it's back tests so well. So this was the old study. The new study, this ended in 17. This is more recent, up to January. The returns of buying in the morning, selling in the afternoon were larger, not 5.2%, but 13.9%. And the gains in 19 compared to 17 were 634.2 compared to only 568. And then Steve Burns did a more recent study, and his numbers came up with 712% return. So it's a great back-tested, quantified approach. I did buy it at the close of the market yesterday. It opened very slightly down for a very, very small loss. It's lower than where it opened. So that was a very small loss, but you can see in the last 7 days, it was a monster. Bought here, sold here, bought here, sold here, bought here, sold here. Bought here, sold here, bought here, sold here, bought here, sold here. So since I've been trading it, it's definitely been profitable. So I will be buying this again at the end of the day. All right, here's the Qs. I did buy the Qs back on the 7th of June. And why did I buy it? Well, the stock market was up, but the VIX was also up. So that drew my attention to the trade. Plus we had this nice V1. Here's day one, day two. Day two washes out day one, closes back above day one's close. That was my entry signal. My stop was a close below the halfway of this washout bar. 2 days ago, it ended right there, so it kept me in. Yesterday, it ended above, kept me in. Looks like today, unless we have a big rally, that it will close below, and I will go ahead and take a very small loss. So that's what's going on with VIX. MasterCard. So I've only had two shorts in, I've only put on two short trades in this live stream. One of them was Visa, and I did short MasterCard back on the 6th of June, or the 10th of June. And why did I short it? Well, for two reasons. One, it was over 70 RSI, then it closed under 70 RSI. It was over the third ATR channel, closed under the third ATR channel. So that was my signal to go ahead and go short. Yesterday, we had a nice big down day. We hit two profit targets. I think like one here, one down here. Today, it did go down again, got close to our profit target, but now it's rallied back up. So that's fine. I will probably use a close above the previous day's high as my trailing stop. But even if it got back up to here, I would still be profitable on the trade because I locked portions in here and here. My initial profit target was the 70 RSI. So we'll see. We have this big down bar. We're about halfway into this bar. I don't think it's out of the woods yet if you're a bull. So I don't mind staying short here, being that I already took profits here and here yesterday. So that is what we have. It is a slightly down day, but that's fine. We have had a monster last 7 days. Getting very close to an all-time high for the year in my account. Not quite, but inching up there, which I think is saying something. So I'm really grateful and happy for that. Okay, so let's take a look here. Hey, Steve Burns, how you doing? Thank you so much for coming by. Steve says, looks like we are starting to go into range bound after this nice bounce off older sold areas. Yep, I agree. Kind of running out of buying fuel, it seems like. I think to continue up higher, I think we need some kind of news or something. We do have the Fed meeting next week. It's the 18th and the 19th of next week. So that will be an interesting time. I always mention that I don't like to buy in front of earnings because you really never know how having large positions in front of Fed meetings is also precarious. So, you might want to keep that in mind, maybe have lighter positions than normal going into a Fed announcement, but they can be market movers and you never quite know which way they're going to go. Dr. Jorgensen says, SPY could have been nice to you and open up a little bit higher. Yeah, well, I'm okay with it though. It didn't open up very much lower, so I'm still okay with it. Steve says, always great to watch you work. Oh, thanks, Steve. If people don't know who Steve Burns is, he's a famous author, trader, mentor. He has wonderful books. I have read them so many times. I've studied one-on-one with Steve and really made a big difference in my trading, and I'm glad to call him a friend. And his Twitter handle is @S Joseph Burns on Twitter. He has a great Twitter channel, great information, great posts. I really highly suggest it. And then his website is newtraderu.com. He has courses on there. He does a commentary on the market 3 times a week. I am a subscriber to that. I watch it every single time he comes out with it. It's really invaluable. So check him out. Check out @S Joseph Burns, and also check out his website at newtraderu.com. Mount Doji, a BB option gave me a great day today. Would you have BB? I'm not pulling it up, Mount Doji. Maybe I'm looking at the wrong thing. Mount Doji says, if Steve is here, I must be at the right place. That's right. Dr. Jorgensen says, MasterCard doesn't like to go down for long. That is true. You got to take it quick with MasterCard. Steve says, I listen to you as I make my trades each day. Oh, good. Well, I'm honored, Steve. Oh, say hi to Holly, too. That's Steve's wife. And say hi to the German Shepherd and the other dogs. We're both German Shepherd owners. All right. So listen, before we get into taking a look at particular trades, I did find this on Twitter, and I wanted to share it with you. I thought it was important. I think the best advice from master traders and good advice isn't really about specifics on how to trade. It's more about the emotional side, the psychological side, because really that's what's most important. That's going to be the difference between you being a profitable trader or not. But Beyond Trading Tilt says, leave your ego at the door. Never let your ego be a factor when making an important trade decision. Try and look objectively at what is best for you in real terms rather than what will satisfy your immediate primal emotional need to feel good. And it's so true. You have to take a look at the big picture, not just the impulsive thing that's going to kind of give you a shot of dopamine to make a trade on some kind of impulsive thought. So, look objectively what's going to be best for you in the long term, not just what's going to feel good at the moment. And, you see a pattern here. I post these things every day, and they're not about specific trading patterns. They're not about some magic holy grail that, I do this and this, and I just make a ton of money. It's about emotions, keeping your emotions in check, following your rules, delaying gratification. So anyway, I thought that was good, and I wanted to share that with you. All right. Well, let's go through and see if there's anything that we might want to get interested in today. Gail Penno. Hi, Gail. Thanks for coming by. Love Shepherds. Lost mine a few years ago. Now I have Bulldogs. Well, all dogs are good. Gail, I raised a pack of 10 German Shepherds. I had mom and dad. I had 8 puppies. And then I had 1 St. Bernard who thought she was a German Shepherd. So I raised 11 dogs at one time. So I'm a huge German Shepherd fan. Unfortunately, they've all passed away, but I'll tell you what an experience raising a whole family of German Shepherds. I just loved it. So now I just have 1 German Shepherd. Her name is Katie. She's right over here. She's my constant trading companion. She sits next to me while I trade. So Thanks for coming by, Gail. It's nice to have you here. All right, so let's go through. Apple. If it closes below yesterday's close, we're going to go ahead and just take that trade off. It was a nice trade. Amazon. I did buy Amazon back here on the 7th of June. Got boom, boom, boom. 3 days up. Phased out of all my positions. So now I am out of Amazon, but that was a really nice trade. But nothing on Amazon today. Boeing. We've had 3 days down here. I'm not interested in it right now, but if it could settle down, stab down, reverse back up with the V1, V2 entry, higher low V1, V2 entry, that might be interesting, but not today. Alibaba, we were considering Alibaba yesterday if it had closed above the 200, but it went up above, closed back below, rejected it. There were a bunch of sellers came in here, no more buyers. That's what drove it down. And so now it's under the 200, which, if anybody has Alibaba, I'm sorry that it went down, but from future trading perspective, I'd like to see this maybe go down one more day, then move up, give us a higher low. Then we have a higher low here, then this low, break back above the 200. So close back above the 200, I would go ahead and enter a position on Alibaba. Caterpillar, kind of a blow off day yesterday, but nothing there today. Canopy Growth, we have 62.74 is our line in the sand. So if it does close below, 42.74. If it closes below 42.74 today, I will go out and take a very small loss. If it closes back above, I'll continue to hold. You raised St. Bernards when you were younger too. Oh, wow. Wow, we're two peas in a pod, Gail. German Shepherds and St. Bernards. Oh, that's awesome. Yeah, my St. Bernard, her name was Abby. What a love she was. Cisco. Anyway, so you can see a pattern. The big techs are coming off from their highs today. So it doesn't mean they're going to crash. It just is normal. These techs now, I would be looking for the prices to move back down into the value zone, and then look for a V1, V2 entry possibly going forward. Delta had that nice break above the 200. Is profitable since then, but nothing right now. ProShares, we already talked about that. Bought that here, been phasing out, waiting for a close below the 200. Dow Jones, boy, that was a crazy bar. I don't know if that was a real bar or not, or a bad tick, but nothing on Dow. So I did buy Walt Disney back here on the 3rd of June when we had this V2 formation, day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 1, and we rode that baby all the way up. We got out here, luckily, right? That was a monster trade. Now it's moving back down. It's moving back down into the value zone. We had 2 momentum bars down. Now we're starting to find a little bit of some support here. This is what I'm looking for. I'd like to see this drip down or move sideways a little bit, then have one bar that stabs down, test the waters, doesn't like it, reverses back up. That would be my entry. But, be patient. It had a nice run up. Let it come back down into the value zone. Look for an entry and see if we can go back up and test that previous high. But nothing on Disney today. Etsy had a monster day. I considered it buying here, but I already had some other tech positions, so I didn't buy it. MACD had turned positive here, but I didn't buy it. But it's moved up nicely. So if any of you have Etsy, congratulations. Facebook is down today. It's had a beautiful run. I know Steve bought it right down here when it bounced off the 200. Not speaking for Steve, but I imagine he will be locking in the profits because we had a close below the previous day's low. Just a guess, but I think that's probably what's going to happen. 5 below is green today, so the relative strength on 5 below is good, but this is the one that we bought on the weekly, the move up, down, sidewards, spike down, V2 reverse. So it is at least positive today. So that's good on a day like today. Gold, this was another great trade we bought. We bought gold here back on the May 30th when the 5 EMA crossed over the 20-day EMA. That was one signal. We also took out the previous high, which was a fractal. Fractal has two lower highs to the left, two lower highs to the right. So we had the 520 EMA cross. We took out the fractal. We closed over the 50-day moving average. MACD was positive. Lots of great signals, just lots of great signals. And it moved up nicely. I think I ran out of shares about here. I scaled out, scaled out, scaled out, ran out of shares about here. So that was a wonderful trade. Thank you, gold. Really nothing going on with gold right here where I would be interested. Google. This looks like it's going to possibly close below the previous day's low. So nothing for me today on Google. If we came back down here, tested this previous low, or we came down another day, then had a nice V1 higher low, V1, V2 to the upside again, I would buy that. Now remember, people that bought this low, that were lucky enough to buy this low, they had a nice move up. They are going to be looking for some kind of rejection of higher prices, and that will probably cause them to sell. That will cause the prices to come back down. If it can stabilize and then start to move up, then it has an easier time of moving up because the people that bought here sold here, but then new buyers came in here. Now the people that bought here and sold here, these people are out of the equation. So you have a whole group of buyers that are out of the equation. Of course, it's easier for a stock to go up if an entire group of buyers has disappeared. Steve says, yeah, I am locking in profits, ERX, Facebook, and Qs. Yep. See, so Steve bought the Qs on a discretionary basis. So that's why he's locking it in. Just like I'm going to be probably locking in profits on Intel because that was a discretionary trade. But because my plan was when I bought the Qs, I was just going to hold this as a trend trade. That is not why I am not locking in profits on Qs. I like to have different types of trades. I like to have some discretionary where I get in there and I adjust depending on what the price is doing. And then I like to have other kind of medium, longer term trades where I'm in above one point and I'm out below another point. So in addition to, I like to sell puts and the overnight SPY trade. So it gives me a variety of different trading approaches. Just like you should have a variety of different type of stocks, not too many in one particular area. My philosophy is I like to have a broad range of trading approaches as well to help smooth things out. All right, where were we? Silver. Nothing really on silver here at the moment. If it continued to move sideways, we had a stab down, reversal V1, V2. That might be interesting. You'll be able to go on vacation, spend all those nice profits. Thanks, my whole life is a vacation. Hey, I don't think I've ever heard that saying, Steve. That's good. That's good. That's the thing about trading, if you can get your act together, you can take good signals and get your emotions together. You could probably trade from home and make a living, but it's harder than it seems. Boy, I watch ads on TV or ads on YouTube about how easy trading is. Oh my gosh. It's not that easy, everyone. It's actually very difficult. I've used this analogy before, but losing weight's pretty simple, right? You eat less and you exercise more. It's pretty simple, but it's not easy. It's hard to do those things. I don't think trading is that difficult. I think it's a simple plan. Let profits run, take care of or cut losses short, let profits run, do what you're going to say. But again, it's simple, but it's not easy to do. And it's because of emotion, ego, and the things you have to battle. So, try to look at this in a simplified way. Try to look at each trade like it's just one of the next 1,000 trades. Don't put too much energy, get too emotionally involved in it. Don't buy too much position size on one particular trade. Just think of each trade as the next one of the next 1,000 trades. Steve says it takes a long time and you need to keep expenses low and have a large account if you want to go full time. Yep, that's right. That's right. But in order to have a large account, either one, you have to build it up, or even if you do have a large account, you better know what you're doing in order to manage that account as well. So, whether you have a large account or small account, treat it like it's all the money in the world. Treat it with respect. Okay, so we looked at silver. SPY. We'll be buying this at the end of the day. Square was another great trade we had. This is a good example of a double bottom with the divergence. Here we have a low, we have a rally, we make a lower low, but during this lower low, you see the readings of the MACD bars, how shallow they are compared to the previous MACD bars, how low they are, how deep they are. This is MACD is a momentum indicator showing that this second move down is showing a lack of momentum. So this is called the double bottom with the divergence. This is this is Dr. Alexander Elder's favorite technical setup. But just because it happens doesn't mean you immediately buy it. It's painting the picture for you that it's in a good area, good potential setup, but then you need some kind of trigger. And my trigger was here on the 4th of June when we created a V2. Here's day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above day 1's close. Also close back up into the prior range, making this area here a false breakout to the downside. So we had a false breakout to the downside. We closed back up into the range. We had a V2 entry. MACD went positive, and we rode that baby all the way up to there. I think I ran out of shares here. So that was a great trade. It was over 14%. It was the largest percentage gain winner I had for the year. So nothing on Square here today. AT&T, really nothing going on with AT&T. We had that big, strong momentum bar to the downside. Really nothing to interest me here on AT&T. Bonds, we had a nice move up. We did come back down. We have been moving sidewards. Looks like we've caught some support at the 10-day. For me to get really interested in this trade, if we could get down closer back into value in between the one ATR channel and the -1 ATR channel, the green lines, and had a nice V1, V2 entry around the 50-day moving average or the 50 RSI or the 20-day moving average here, I would be possibly interested if it gets down into this area. But remember, getting down in this area doesn't mean anything. It has to get down into this area, but then you also have to have a trigger to trigger you back up into the trade. Tesla. This is called a bullish engulfing candle when bearish engulfing candle. It's higher than the previous day's high and lower than the previous day's low. That is generally a bearish signal, so not interested in this. Good example here. You see the ATR channels from here to here. That's the distance of one ATR. From here to here, the distance of one ATR. From here to here, the distance of one ATR. See how this bar here is larger than one ATR? So it is outside of noise. It is outside of the expected amount. So the way I process this is when I see a large bar, up bar or down bar that's larger than one ATR, it catches my eye because it's not just noise anymore. To me, it means something has changed. That's why Greg's down to 1 dog. Save on dog food so I can trade. Well, yes, you do save money with 1 dog for sure, but I wouldn't mind at all having another pack of 10 dogs, regardless of the price. Natural gas. It went from under 30 back over 30 back here on the 10th of June, which is a legitimate buy signal, but it's only one signal. I like when you're under 30 and under the third ATR channel, and then you close back above the 30 and close back above the third ATR channel as well. So it went back over 30 here, it went back over the ATR channel here, but I like when it happens in one day. In my opinion, when multiple triggers happen in one day, I feel like they're stronger. So not interested in natural gas here right now. Oil. Well, we're at a 27.95 RSI. We're under 30 RSI. So I would not be interested in buying oil. If tomorrow we close back above the third ATR channel, and we also close back above the 30 RSI, I may be interested in that, especially with it having somewhat tested the previous low. So nothing on oil today. The dollar is a little bit stronger today, obviously. A close back above all these moving averages may get me interested back into the dollar, but not at the moment. Not at the moment, nothing there. Visa, up a bit today. The VIX we have, I'm going to have to watch this. Remember, my line in the sand, closing line in the sand on this is 27.86, and we're 27.81. So if this closes above, I'm going to go ahead and continue to hold the VIX. Verizon. Well, we came back down, we went up, we made a lower high. Now we've made a higher low here, so it's kind of moving sideways here. If we had a close back below the 200 here and back above, I might be interested in that. But now it would make that a lower low from the previous low. So possibly a break back above this high here on the 7th. Two lower highs to the left, two lower highs to the right. That gives you a fractal. In addition to a breakout of the previous range. So it's moving sideways here. I really nothing that I want to do with this here until I see some kind of price action, either lower or higher. XLE, Steve mentioned that. I believe he bought it, I think about here, I think he bought it there. And so it's moved up nicely. I think he's going to exit this today because you have a close below the previous day's low. So nothing for me there. However, if we do come down another day and then reverse back up with the V1, V2 with a higher low V1, V2, I might be interested in going long at that point. We'll just have to see what happens. Oh yeah, Mount Doji. Verizon is just kind of neutral at the moment. It is kind of moving sidewards, and you know about sidewards moving. Eventually, sidewards winds up like a spring and goes one way or the other. The only problem is we don't know when it's going to happen, and we don't know what direction it's going to happen. Let's look at the weekly real quick. Yeah, see, in the weekly 2 weeks ago, we had this huge big bar. So it's range bound in here, starting to wind up. Eventually it's going to move one way or the other, but let's wait and see which way it moves and what the technicals tell us, instead of trying to anticipate it. Financials. So financials did have a nice move up today. Move back down now. Looks like we're going to close below the previous day's low. I imagine people that were in this trade here probably might be taking the chance to take some profits off the table. I think a lot of traders out there were waiting today for some kind of close below the previous day's low. We've had a nice run up. There's been a lot of profit percentages to lock in, but patient traders like Steve and myself, we were waiting for the market to tell us that maybe we are going down instead of just trying to anticipate where the top was. So, that might be part of what's going on today, of why we're having some sell-off here. We are in a nice, recent uptrend though, so I would be looking for some kind of dips, but I think today is the day on a lot of these stocks that people are going ahead and just locking in some profits. Real estate. Well, you can see, what do we have, 10 minutes? You can see we have had some issue with this level here back on the 7th. That was about the top. Today we tested that again, rejected it. So, that seems to be where some sellers are moving in. Really nothing I would be interested in on real estate right here. And then healthcare, darn it, I missed this trade at the end of the day. I was looking to buy this if it closed above the 200-day moving average, and it seemed like 30 seconds prior it was way under. And then at the end of the day I looked and I was like, what had happened? I definitely would have bought that trade. That was a bummer. And that did move nicely. So if I had bought above the 200, I still would be in this trade. I would be holding this trade. So let's take a look here. ProShares, that is a trend trade, so I'm not going to do anything with that. Lockheed Martin, I do like that it moved up. I do like that it's moved down. I just want to see this hold for a while, stab down, reversal, back up. And then oil, a lot of volume today on oil. So I do not see anything that I want to buy today, which is a good thing, right? I mean, it's important. You don't have to trade every day. As a matter of fact, I think if everyone cut their trading in half, it would probably be a positive thing. I hear people talk about, well, I need to make $400 a day, or I need to make $300 a day, or $500 a day. And I'm just astounded when they say that. You can't, you make 20% of your profits or 80% of your profits on 20% of your trades. And you never know what time of the year those are going to come. I mean, you might have four months of losses in a year. You might have 4 months of just breaking even for a year, and you might have 4 months of making your money. So you can't just say, I have to make $300 each day. It just doesn't work like that. It's not that evenly distributed. So they come when they come, and the more important part is staying out of the market and not taking trades. You don't want to take a trade because I have to make $300 today, and so you take a subpar trade. That's just not how it works. Yeah, no bargains, Bruce. You're right. There's no bargains. There's no setups. I just don't see anything. And remember, we have had a nice run here. So let's not give back all those profits just because we feel like we have to press a button, right? All right, let's take a look at my remaining positions and make sure we get this. Let me take a look here. All right, so Apple, as long as it closes above 193.60, I'm gonna write these down. I always like to write my positions and my levels right down, just because at the end of the day things get hectic and sometimes you don't look in the right place, and it's hard enough to do it even if you knew it in your head. So I like to write them down, exactly what I'm gonna do. Give you an example. See right here? This is from another day, but so I have this written down so I know exactly. Amgen, sell below range at this price. Goldman Sachs, sell under 200-day, this price. So I can immediately take a look at my position so I can have a better chance of executing all my trades. I know Steve understands this lately. It has been right down to the wire on these moving averages and the prices at the end of the day, trying to execute all your trades. Sometimes it's literally just humanly impossible, as Steve mentioned yesterday on his video newsletter. So you do the best you can. Sometimes you have to take some off with 5 minutes to go or something like that, and then it may end up closing different than you thought, but you just do your best. So all right, so Apple, sell under 193.60. CGC, where is our stop? 42.74. Well, I can tell this is going to be a close one. It is currently above. DDM, that is a trend trade for me, so I will just be keeping that. 5 below is moving up nicely for us, so that's great. So we will keep that. Remember, this is on the weekly. If it does close this week under 128.60, that will be my signal to exit the trade. So we'll see what happens with that, but it's looking fine. It's up nicely today, which is good. Intel, I will be getting out. So Intel under 46.52. So I'm going to go ahead and just lock in that trade there. That was a nice, beautiful trade. I guess it could possibly close back over, but we only have 5 minutes. So I'm going to go ahead and just take this off the table, lock in that profit. Thank you, Intel. It was nice doing business with you. Philip Morris, I do not like. I just don't like the action of Philip Morris at the moment.
Order partially filled.
All right, so
Order filled.
locked in a small loss on Philip Morris, but that's okay. Scratch trades, small losses are allowed in profitable trading, and they're going to happen a lot. You just don't want to let them run. That's the issue. The Qs, this is a trend trade. I'm going to be just keeping this one. SPY, I'm going to go ahead and buy my SPY position for the end of the day.
Order partially filled.
288.17.
Order filled.
All right. And VIX. VIX, our number is 2786. And right now it's 2778. Oh, Apple's going to be close. Apple's going to be close and VIX is going to be extremely close. And I think that's all we have that I really have to monitor. 193.60, 193.86, darn it. What do we have, 2 minutes? Boy, this is going to be tough to juggle this. Let's see. These two are right on the button. So we bought our SPY, we got rid of our Intel. We got out of Philip Morris. There were no other things to buy today. Okay, so we've got a minute and a half. Oh, and CGC. Well, CGC does look like it's going to be okay. VIX at 86. All right. So Apple looks okay. Apple looks okay. $27.86 on the VIX. got about 10 seconds. Apple looked like it's going to be okay. And I'm just going to have to go ahead and pull the trigger on the VIX.
Order partially filled.
All right.
Order filled.
All right. So
Order cancelled.
a slight loss today. No big deal. But that's how trading goes, right? So we ended up, so we still are in Apple. CGC did close above. We're keeping that. DDM is still above the 200. I'm keeping that. 5 had a nice day. Intel I did get out of, so thank you very much, Intel. That was a great trade. Philip Morris, decided to just go ahead and get rid of Philip Morris and lock in that trade. Small loss. Qs were still fine. SPY I did buy at the end of the day, and the Qs very small loss on that. So we didn't enter any new positions today. Oh, and MasterCard. So yeah. So listen, if anybody has any questions, please let me know. I'm happy to answer them. I just do want to put in my quick little plug. I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. So if you feel that working with me could help your trading, please let me know. My hourly rates and my contact information are in the description of this video, or you can send me a message on Twitter. But I have had good success with my clients. I like to teach, and I think they're learning what I'm teaching them and putting into practice. So generally, it just starts out with a free phone call just to get to know each other a little bit better. I want to understand what your experience is, how you're currently trading, what your issues are, and then I can put something together for you, a good, solid trading plan that hopefully is going to help you continue on and become a long-term profitable trader. That is certainly my goal. And then lastly, if you did like the live stream today, or if you like my channel, you're learning something from these videos, please do me a favor, hit the thumbs up button. It helps to grow the channel, and with Google and YouTube and all that kind of stuff. So if you wouldn't mind, hit that thumbs up button, and even maybe share it on social media or tell a friend about it so we can grow the channel. So, all right, that's that. And let's see if anyone has any questions for me. Let's see, where did I save your money? No bargains, photo finishes. Yeah, Steve, totally photo finishes. Ha, I wrote down the same thing on my post-it notes. Oh, good, Mount Doji. I'm telling you, it's the small little things you do, how you write down your trades, how you keep your records, how you have your information organized so you can look at it and make sense of it when you need to, right? Especially when you have these photo finishes days. I mean, these are the small differences, the devil's in the details. These are the small differences in between profitable traders and unprofitable traders. So I'm glad to hear that, Mount Doji. And I'm also glad, Mount Doji, that you're reading these books. You're reading Steve Burns' books. I see your post on Market Wizard books. I mean, they're great books. I mean, you're really putting in the time and the effort. I'm really impressed, Mount Doji, that you're doing this. And that's what it takes. Trading is not a simple thing. You need to work at it just like anything else. So congratulations. Rocky 53204 missed the rally today in nervous cash. Well, the rally today, it didn't really rally much today, but I understand the nervous cash position. But I like when people say nervous cash. I like the fact that they're nervous, because I know if they're nervous, they're scared. If they're scared, I think they're going to respect the market. And if they respect the market, I think they're going to become better traders. The type of trader that scares me is that's cocky, that has a lot of bravado, that's not scared of the market. Trust me, those are the type of traders that are going to get humbled by the market. I've been there. I've done this for 24 years. When I first started out, I was too young, too dumb, and I wasn't scared of anything. Well, that taught me to be scared after a while, and being scared has made me a good trader. So Dr. Jorgensen says cash is always nice. There'll be some bargains again. Have a good hike. Thanks, Bruce. I appreciate it. Hope you have some good golfing today. Mount Doji, would love to hear your thoughts on LYV. Well, positive and negative. I mean, MACD is positive. We're above the 50 RSI. We did have a 520 cross today. We did break out over this little previous range over here. On the negative side, I do not like that the 50 and the 1 ATR channel are right above here. Let's take a look at the weekly. Nice V1 on the weekly, right? Last week, see the V1? Here's bar 1, bar 2. Not too bad. Not too bad. If I were to buy this here, where would my initial stop be? Probably the 20. It lines up with the 5 somewhere in this area. Another option would be for a close back above the 50-day moving average, but of course, then the higher you get up there, then the closer you are to the third ATR channel. So it's not bad. I mean, it's really not bad, Mount Doji. Let me take a look. Let me see where the 50 RSI would be tomorrow. Oh, sorry. This is a little tool I have here with Trade Navigator, and it's one of my favorite tools because I can manipulate the current day's bar or the next day's bar to kind of see what readings are going to be. So tomorrow, the 50 RSI is going to be there. So yeah, close below the 20 is probably where, if I were to take this trade, is that I would go with, because if it can bust out from here, if it can bust out above the 50, then it might have a ways to go. So it's not bad. Rocky says, missed an earlier day trade on incest, could have doubled, chickened out. Well, there's nothing wrong with that. I mean, of course, we can't chicken out on everything, but I'm glad to hear that you have that you have some respect for the market. That is one, in my opinion, that is one of the traits that you have to stay in this market a while. You know the old saying, right? There's bold traders and old traders, but no bold old traders. And it's true. Some people go in there and make huge bets, make a lot of money, but then they give it all back. But to do this long term, you literally cannot be bold. You have to respect the market, position size correctly. And again, treat every trade like it's just the next 1,000 trades. It's just nothing special. It's just one trade. Gail says, have to go, but thank you. I'll be back. Oh, thanks, Gail. Thank you so much for coming by. And thanks for saying hi and letting me know about your dogs. Oh, rally was early in the week, Rocky. Okay, I gotcha. Yeah, I know. It's a bummer. It's a bummer when the rally moves up and you're not in it. Been there a million times. Totally get it. One possible suggestion is that if you are really scared, but everything lines up nicely, take a quarter position, take an eighth of a position. It won't make you as scared because you have such fewer shares, but it also will give you the experience of managing those trades. So, in the future, if you see a good signal, if you feel scared about it, maybe take an eighth position, a quarter position, half position of what you would normally take, and it won't make it as intense. Mount Doji says, I'm always wishing I had that what if tool throughout the day. I know. It's a good tool. And I've never seen another trading platform that does it. And I use it every day. Tomorrow, like on Apple, I'll say, okay, where's the 70 RSI going to be? And that helps me phase out, that helps my formula to phase out. like on MasterCard, right? We're short MasterCard. See how the 50 RSI was at 250, 260? Well, tomorrow, let's see where it's going to be. Roughly there. See how it's going to move up? And then I'll base everything from there. But yes, it is a really nice tool. If you don't have it, sometimes you just have to look at the previous reading and kind of estimate where it's going to be. But yeah, I don't know what to suggest other than just taking a look at the previous reading and kind of estimating where those prices are. All right. Hey, just remember, try to do something nice for somebody today. Just hold the door open for them, say hello, give them a little smile, little something. You know, you may have a real positive effect on their day by doing so, and then they may go ahead and pass it along to somebody else. So it's free, doesn't cost anything, and you know, this grumpy old world, people are so sometimes, right? So try to spread a little sunshine, a little love out there. It just doesn't hurt. It's a good policy. Mount Doji says, could you share what the major differences are between stop loss and a stop limit? I always get confused on them. I was wondering if you had an easy way. Well, okay. So let me find a chart here. So here's Amazon. It's at 1855. Let's just say you wanted to put a stop loss in right here at 1823, right? Let's just say that was going to be your stop loss, 1823. So if you're going to put a standing stop loss in below you, you would say, okay, I've got 100 shares of Amazon. I'm going to sell 100 shares at, if it gets to 182.23. That's a stop loss. So as soon as it hits your price, it's going to turn into a market order and it's going to sell at whatever the bid ask spread is. Now, so you could put the order in at 1823. But if the price gets down to 1823, it doesn't mean you're going to get 1823. It just means when it actually hits that price, it's going to turn into a market order. So you might get filled at 1822, right? A stop limit means that it will go down if it hits 1823, then it becomes a limit order at 1823. So it will sell only if you get 1823, but if it's moving quickly and hits 1823 and you have a stop limit in at 1823, it doesn't, you could possibly not get filled and it could continue down. So the safer way is if you put a stop loss in. The pluses of that are for sure you're going to get filled, but you might get filled less than 1823. If you have a stop limit order, the plus is if you say 1823, it's going to be 1823, but if it keeps going lower, you may not possibly get filled. Make sense, Mount Doji? Now, you know, because I'm an end of day trader, I really don't trade with limits. I don't put stop losses in because my stop loss could be in the middle of the day and it could rally, right? So now if I was on a trip or I was in front of my computer, something like that, then it might make sense to just put a standing stop loss in. It's better than nothing, right? But if you're sitting in front of the screen, then I think that's the best of both worlds. So, but that's the difference between a stop loss and a stop limit. Are you enjoying Market Wizards, Mount Doji? Sometimes listening to explanations are easier than reading them. Yeah. All right. Well, today was our first little red day in 7 days, so I guess you have to give some back to the trading gods, but that's okay. And this is one of the first days we have not taken a trade, but I think we should be commended for that because there was nothing to take. And one other thing I want to mention, sometimes when I have a good trade, big trade, people say, "Hey, good job, good trade, good trade, Greg," and I appreciate that. But in reality, and this doesn't go for me, this goes for everyone. Whenever you take a loss, whenever you get out of something that you're supposed to get out of, that's really when you should be congratulated, right? That's when you're doing, like right here on the VIX. I got out, it closed 8 cents below. That's really what should be positively reinforced, because that's the most important thing, is getting out when you're supposed to. So if you know someone that trades and they said, "I had to get out, I didn't want to, but I hit my stop," that's when you should encourage them and reinforce, because that is really the most positive behavior that they can do. Ed Sakota chapter tonight. Sweet. Everyone gets what they want from the markets. That's what you're going to read about Ed Sakota. He believes that everyone, some people subconsciously want to beat themselves up. So they go into the markets and they get beat up. And they get what they want out of the market. So it's pretty deep stuff, but let me know what you think about that chapter. I really like Ed Sakota. All right, everybody, I am going to get out into the mountains and go hike. And, when I go hike, I always think about what I did in my trading, what I could have done better. It's a good time to kind of reflect about what I did, how I can improve. Bruce Kovner's statement on, yeah, those are all good chapters. So, all right, well, listen, hopefully everyone can make it tomorrow again during the last hour of the market. It's going to be interesting. What's tomorrow? Thursday. It's going to be interesting to see if we have some follow through on the downside, if we have a reversal here. Not quite sure what's going to happen. So, but I guess we never do, right? So you're going to be paying more attention to correlation. It's hugely important. Hugely important. You can't have 5 tech stocks. It's just like having one stock with 5 times the position. So, all right, everybody. Thanks again. Hope to see you tomorrow and on the way out here. Thank you, Andy. Appreciate you coming by as always. Thank you, Steve. Thank you, Bruce. Thanks, Rocky. Rocky, I think this is the first time you've come in today. Appreciate that. Gail, it was nice meeting you. And Mount Doji, of course. So, and Steve Burns. All right. On the way out here, I've got to play the legal disclaimer. So, hope to see you tomorrow, everyone. Have a good rest of your day. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.